Thursday's GDP number showed slower than expected growth, and Treasury yields dipped immediately in response. How's that impacting today's refinance rates? Let's take a closer look. The 10-year US Treasury dipped right after the GDP numbers came out, but they have recovered since then and now currently trading at 3 basis points lower at 4.523%. This happened as investors digested the GDP report, which came in at 2.3%, much lower than forecast of 3.1%. But that decrease was because of wholesale inventory drawdown. However, there was a compensating factor of increased consumer spending, which gave markets some sigh of relief, and hence the Treasury yields recovered. Here are today's refinance rates for January the 30th. Wells Fargo increased its interest rate to 7.125% with higher APR of 7.271%. JPMorgan Chase held its rate steady at 6.625% with a reduced APR of 6.717%. US Bank maintained its interest rate at 6.875% with slightly lower APR of 7.048%. Bank of America remains at 7% but with higher APR of 7.197%. Citi Bank held its rate at 6.875% with increased APR of 7.084%. As you can see, most of the refinance rates are either stable or lower, except Wells Fargo, which is going in the opposite direction, probably because they want to scale back from the mortgage business. But do you think that lower GDP growth will still continue to push refinance rates lower? Or could increased consumer spending bring in inflation, and hence that would elevate refinance rates? Follow me for daily updates and stay ahead of the market trend.